Assalamu alaikum students. I hope that you all are fine and doing well in your online classes. Today we are going to start our third lecture of accounting. But before, I would like to briefly give you an overview of my previous two lectures. First of all, in previous lectures, we discussed about business and its types, need of accounting. Thirdly, we discussed definition of accounting. In addition to that, we discussed steps involved in accounting. And now we are on some key terms which we use in accounting. In key terms, we have discussed about transactions and heads of accounting. There are 6 heads of accounting. The first one was asset. As you all know, assets are the properties, things possessed by a business or things receivable by a business are known as assets. Assets basically have two types, current assets and non-current assets. Current assets are those which give us benefit for the very short time period. And opposite to that, non-current assets was those which give benefit us for the very long time period. So now, moving toward my next head is liabilities. What are liabilities? Liabilities are debt or loan which a business has taken from an outsider bank, an outsider person, or any institution to fulfill his business needs. Now, moving toward slide number 3, I can define it more properly. Liabilities are the loan, debts, and obligation of a business which a business need to pay. For example, bank overdraft, trade payables, and all payable items are known as liabilities. Every business needs money. If we need additional money, we can borrow it from any institution or bank. So that would be regarded as liability. Here I have given examples of trade payables and bank overdraft. So what are trade payables? When we purchase something from a person on credit, it means on loan, and business have to pay him, that person would be known as a trade payable for our business. For example, we purchase furniture on credit from Mr. Ali. Mr. Ali would be known as a trade payable of a business. Trade payable are also called accounts payable or creditor of a business. On the other hand, what is bank overdraft? Bank overdraft is a short-term loan which we take from bank for usually for 15 days to 1 month. So these both are examples of liability. Now moving towards slide number 4, I am going to describe types of liability. Like assets, liabilities have also two types, current liabilities and non-current liabilities. What is meant by word current? Current means present. It means that liability which we need to pay at the present time period would be a current liability. So how we can define it? Liabilities which are payable within a very short time period, which time period is usually 1 month to 12 months, or usually within a 1 year, are called current liability. For example, bank draft and trades payable, which we have discussed earlier. On the other hand, The second type is non-current liability. These are opposite to current liabilities. These are those liabilities which we don't need to pay in present. We can pay them after a long time period. So how we can define it? Liabilities which are payable after a long time period, usually after 1 month, are called long-term liabilities. For example, bank loan which we have taken for more than 1 year, for example, for 2 years, for 3 years, or 5 years, would be regarded as a long-term liability. And in slide, you can see a comparison of current and non-current liability, as current liability are payable within 1 year, while non-current liability are payable after 1 year. Current liability arises from routine operations. It means that the current liability is a routine matter of a business. For example, if we are purchasing goods continuously on credit, that would be a routine matter for our business. On the other hand, non-current liability arise from long-term funding. It means that when we need a long-term loan or long-term cash or money for our business, we incur a non-current liability. Current liability includes an example of accounts payable, which is also known as trade payable or creditors, bank overdraft. On the other hand, non-current liability includes long-term loans, which we usually take from bank or other institution for more than 1 year. So this was our second head of accounting. Now moving towards whiteboard, we have our third head, which is known as capital. What is capital? As you all know, business is started by its owners. How owners start a business? They invest their money, their resources, for example, machinery or any kind of land they have in business. So, what investment made by a owner would be regarded as capital? It can be in the form of cash or it can be in the form of non-cash items. For example, a owner has a piece of land for his personal use, or it was his personal property. When he brought this personal property to use in business, that would be regarded as capital. So we can say that the money invested by owners in business in the form of cash or in the form of non-cash items are called capital. When capital is invested, it can be invested at the start of the business or at any later stage to expand or to make our business successful. So moving towards back to our slide number 5, I can define it more properly. Capital is also called equity, and now I'm going to define it. Capital is investment provided by the owners at the start of the business or any later stage in the form of cash or non-cash items, for example, furniture, machinery, land, or other items, is called capital. Okay, we have some points that capital can be in cash or non-cash item. Capital can be provided at the start of the business or at any time to expand our business. Now moving towards slide number 6. Capital is a internal liability which a business have to pay its owners. What is meant by that line? Capital is an internal liability. What is meant by that? As owner provide capital to business. When they will leave their business or end their business, they will withdraw that capital again. So business needs to pay that capital back to owner. So that is why it is called internal liability of a business. For example, moving towards slide number 5, Mr. Akbar started business with cash rupees 100 and machinery, which is a non-cash item, for rupees 200. So total capital of the business would be 300. And you can see in slide examples that machinery and building or cash items are called capital. So these all are forms of capital. Now, I have a small question for you which will help you in solving worksheet, which we can see on slide number 7. The question is, which of the item in the following list are liability and which of them are assets? As we have discussed, both assets are properties of the business and liabilities are loans of the business. We can easily distinguish between them. So the number A is motor vehicle. Motor vehicle is regarded as a property of business as it will it will last for many years. Number B is amount owed to us by customer. What is meant by owed? Owed means the need to pay. Amount which our customer need to pay us. It means that this amount is receivable from a customer. So all receivable are regarded as assets. Number C is land. Land is also included in property of the business. So that is why it is an asset. D, bank overdraft. As in liabilities, I have given you examples of bank overdraft. Bank overdraft is a short-term loan which we take from bank. So this is also a liability. Number E, inventory of goods held for sale. What is meant by inventory? Inventory is also called stock. The unsold items which are laying in our business ready for sale are called inventory or stock, as these are laying in our business for selling purpose and a property in our business, so these would be regarded as assets. And number F is amount owed by us to supplier. It means the amount which we need to pay to a supplier. As we need to pay this amount to our supplier, so this would be regarded as liability of our business. This question will help you to solve your respective worksheet which will be uploaded on Google Classroom. I hope all you have learned your lesson. If you have any kind of a question, you can ask me on Google Classroom. Thank you.